All right, hopefully everyone is having a great week and staying safe. I want to touch base on a couple things, a little bit of a follow-up from last week. That is forbearance, that ugly word forbearance. I was having a conversation with a builder, a national builder, and they are getting into the servicing aspect of mortgage lending right now. And they're doing that because their pricing was so out of whack that if they started servicing their own loans, they got better pricing that they could then pass on to their home buyers and offer a more competitive rate than what their competitors were offering. So it's a little bit of an advantage for them to be able to sell the low rates that are happening right now. But the interesting thing about this conversation was that they were getting into the servicing aspect. And during this COVID-19 situation in our country, a lot of talk in the mortgage world has been about this forbearance and the lack of needing to qualify for this forbearance to the consumer. Needing to show a hardship like you had to show in 2008. A lot of servicers are complaining about that. And if you watch my previous video, I told them to stop complaining about it because I'm not really getting it. And this move from this builder kind of proves my point, to be honest with you. Why would a builder get into servicing if it was such high risk? That's the question, right? So the servicers are out there, the non-bank servicers. I get you don't want to have a big portfolio of borrowers who are in forbearance. Not good. Totally understand that. Mike Calabria came in and did some things, head of FHFA, did some things to help instill some confidence in the non-bank servicers, and said that they would still securitize them and buy that paper, but had a haircut, which I thought was actually pretty generous move, in my opinion. He could have done nothing, but he did do something. So I thought it was kind of good. Now, some of the other things that he's saying and doing might be a little bit questionable, but overall, I think he's trying to do the best that he can, given the political environment that we're in. So just an interesting side note that I wanted to share with you this week from a conversation I had from a national builder. They're getting into servicing, yet a lot of people in the mortgage industry are complaining about the servicing. So a little interesting tidbit about that. Now, because they did that and they are offering good rates, I want to kind of segue that into rates, right? So rates are doing pretty good. They're pretty stable right now. But there is a negative side to interest rates that not many people are talking about, or low interest rates, I should say. Negative side to low interest rates. And that is squeezing the first-time home buyer. A lot of people, a lot of investors I've spoken to over the past month or so say, hey, Jayson, we feel that home prices are going to come down. That's going to be an opportunity to get in there and buy a bunch of rental properties and increase our portfolio. To which I've said, no, you might want to take a second look at that strategy, because I don't think that home values are going to come down. And I certainly don't. As long as these interest rates stay low, home values are going to stay high. Right now in Phoenix, we have a 2-month supply of homes. That means if no other home came onto the market at the current pace that buyers are buying properties, there would only be 2 months left before there would be no homes left on the market. Now, a normal market, whatever that is, right? But a normal market is a 6-month supply of homes. So it takes 6 months to sell every single home that would be for sale in a particular market. That's a normal market. That's an equal buyer-seller market. Right now, it's still a seller's market. So sellers are demanding high price. And with low interest rates, it makes it attractive for people to jump into home ownership because you can get a pretty good home for less than what you're paying in rent. And so with low interest rates, it can put a squeeze on first-time home buyers. Now, if you're a current homeowner and you have you have a high interest rate and you want to refinance into a low interest rate, fantastic opportunity to do so. And some people are even predicting rates may even drop even further. We'll see about that. I think they will stay stable for the next year at least. And because of that, I don't see home prices coming down. I just don't see it, not with interest rates so low. And that kind of caveat or that carrot that's hung out in front of people to jump into home ownership. And as millennials start to age and start to have families of their own, housing formation, we're seeing even more demand for housing. So I don't see a whole lot of downward trend for home prices in the future because of that. So last thing I want to talk about is Opendoor. Opendoor, no secret, I can't stand them, and I wish somebody would just get rid of Opendoor, these iBuying companies or fintech companies or whatever you want to call them. They're just not good for real estate, in my opinion. They rip off clients, they charge a bunch of money, and their sales tactic is ease of process, right? Like an ATM machine kind of thing. Sell your home, no hassle, that sort of thing. And the reality is that with equity positions the way they are, a lot of people have equity in their homes. Opendoor, OfferPad, these, Zillow, a lot of these companies are taking advantage of that equity position, and they're charging for things and charging extra fees that actually end up costing more than if you were to hire a realtor. So hire a realtor, avoid Opendoor, hire a realtor. Now, not just any realtor, hire a good realtor, a realtor who knows the market, who is full-time, not a part-time realtor. I saw a stat on Facebook just the other day, 88,000 realtors here in Arizona, 88,000. That's one realtor per, I think it's 8 or 9 people in the state of Arizona. That's a ridiculously high number. I mean, obviously 88,000 realtors are not doing the business. And, the old saying used to be 20% of the realtors doing 80% of the business. It's more like, 10% of the realtors doing 90% of the business right now. So very important that you interview your realtor, get a good realtor, somebody who knows the market, somebody who's aggressive, somebody who knows how to negotiate, somebody who knows what the future may hold, somebody who can kind of project what's happening in the future and not just live in the present. So that's this week's 2 cents. Hopefully you stay safe, wash your hands, use sanitizer, wear a mask when you need to. I'm not a big mask wearer. I'm gonna be honest. I don't wear a lot of masks, but stay safe out there. And until next week, that was